Right now, we're putting the spotlight on benchmark equity indices in Africa. For that discussion, Mark Kalil, Head of Institutional Sales at Global Markets Africa at Standard Bank, joins us now. Thanks so much, Mark, for joining us this morning. Well, as I said, benchmark equity indices in Africa in the spotlight. We know that a big challenge has been a liquidity of these indices in terms of why they haven't possibly harnessed as much support as one would have thought they would in very trying circumstances that the developed world is experiencing. You listed the Standard Bank African Index on the JSE in May 2011. Run us through the performance there specifically.
Thank you for that. And obviously with liquidity, it's a huge issue. Risk aversion is on globally. And obviously when people want to enter emerging and frontier markets like Africa, you try to get instruments that can offer you investment opportunities. So there's exchange-traded funds, exchange-traded notes, and indices we believe can just give you access into multiple markets through the continent, which wouldn't be that easy in actually buying, let's say, 100 specific stocks. So thank you. We did list the Standard Bank Africa Equity Index on the JSE. Liquidity's been good for the private investor. For the institutional investor, it is still a challenge, but at least the instrument is there. That instrument is traded in rands. It does comply with exchange control, but we have got the same index tradable in dollars. And when we do list that in Edinburgh on a private placed over-the-counter basis, we have got a lot of institutions and funds accessing Africa in that regard.
Let's take a look at how they're actually accessing it, because when we're looking at this indice, what are we looking at in terms of constituency?
For the Standard Bank Africa Index, we represent 29 countries in Africa. It's 179 stocks, and you have to look at the sector allocation. So currently we've got a local listed Africa Index, which is around 55% financials, and then you've got 10% oil and gas, consumers, diversified industrials, telecommunication. We've also got our benchmark, which includes 40% of the indices are internationally listed stocks, like on the Toronto Exchange, London Exchange, but they've got very direct exposure to Africa. And this makes up about 40% of mining constituents and oil. And with the Africa commodity story, that's crucial. So you have got sector and then country selection in terms of your indices.
Of course, one would assume that exposure to internationally listed shares helping with liquidity issues specifically, but it does also bring an element of risk in that you're looking at such a high exposure to the commodity or mining sector of the African economy, where we're sitting right now, Mark, in a very uncertain environment when it comes to global growth and where we're actually headed.
That's a good point. From 2000 to 2008, you had the commodity boom, and I think you would have seen at least 80% outperformance in terms of our internationally listed index, with commodities doing well. You're talking about if there's a slowdown in commodities, and obviously companies like BHP Billiton and Anglo-American, so geared to growth, would come off. However, when you look at Africa and you look at mining exposure in Africa, it's such a fundamental story. Only 20% of the extractable commodities sitting in the ground have been explored in Africa. 40% of the world's resources are still in Africa, and 25% of African GDP growth is coming from resources. So through 2015, when the IMF said that 7 of the 10 fastest growing economies are going to come from Africa, we just feel it's imperative that you have this access into the commodities and the mining resources in Africa. And if you've got an index that can give you this entry, we believe in the long haul that it's very attractive entry levels.
Perhaps providing the greatest incentive for investors to be delving in is its actual performance. So let's stack up the performance of this indice specifically relative to the MSCI Frontier Market Index and perhaps the S&P Africa Frontier Index as well.
In terms of benchmark equity indices in Africa, the space is limited. In the MSCI Frontier Market Index, it's 31 emerging and frontier market indices. There's only 4 African. It's Nigeria, Kenya, Tunisia, and Egypt. The S&P Africa Frontier is 8 countries. When you look at ourselves, it's obviously, we mentioned, diversified in terms of 29 countries, and you've had the outperformance of the commodities. The other 2 are not easily investable. We do believe that the JSE can give entry in rands to institutional and retail investors, and then obviously, as mentioned, offshore, you can access our dollar index. We have outperformed. It's a passive index. It's not actively managed like the likes of a Stanlib or an Investec or Coronation, but you do get the broader entry level, and it has done well since inception in 2008.
Just how well?
Pardon?
Mark, just how well? If you're looking at the kind of growth we've seen, you know, what kind of return have investors enjoyed?
Since the financial crisis, beginning of 2009, our index has returned in dollars over 80%. The relative benchmarks, MSCI and S&P, have been down 10 to 20%. If you look at our locally listed African index, that's one without the international components, that's comparable with the other 2. Yeah. So again, the commodity story has just given you stellar returns, and we believe through 2015 at least, you do need to be invested.